So you want to start trading in 2024, but you're a complete beginner. This video is going to be taking you through the very basics of trading, all the way up to some of the most advanced topics. I'm going to be keeping it very short and sweet as usual. Again, this is going to be a seminar type of video, so there's a lot of notes to be taken down. But yeah, stay tuned, and we've got a lot to go through. Alright, so now we're actually getting into the presentation itself, how to actually start as a beginner in 2024. Now, the one thing I do want to say before we get into anything else is my promise for this year. As Diamant Capital, we've been away for a while, obviously working on a few big projects, but I definitely don't want to leave you guys to the side. I promise I'm going to be giving as much value to the industry as possible, especially free value, but not only that, effective value that people can actually use in their trading. I want to make trading as accessible to as many people as possible. And the one goal of mine is so that people do not waste money spending $500 on a course that they can simply get for free. And this is exactly where you're going to be getting it. 7 modules, all the way from the very basics, introduction, psychology, the basics of trading, going into more smart money concepts. And then at the end, even for some of the more advanced traders, even if, for example, you know smart money concepts quite well, you've been accustomed to it, there's a lot of value, especially in the last few chapters when it comes to the advanced liquidity theorems. So if you want to get your hands on this is going to be completely for free. First link in the description. I want to make trading as accessible to everyone as possible. So please share it around and let's get straight into the video. So now getting into some of the basics modules. This one's actually taken from that free course that I was talking about. So definitely get your hands on it and sign up to it as soon as you can. So the first chapter and the first episode, in a way, it's going to be talking about making money from Forex. Now, how do we actually make money? Essentially, there's 2 parts. There's going to be the funding and there's going to be your trading knowledge and strategy. Your funding is what's going to allow you to have that account. And then your trading knowledge and strategy is what you can build that funding to grow over time. Now, there's going to be a few ways that we can actually make money. But of course, we have to take a few steps before getting into everything. The first part is going to be learning the actual knowledge. Second part, applying this knowledge via demo and backtesting. Third part, once you start to see profitability, you actually get on a live account. And then finally, there's going to be a few ways that you can actually start to make some income for yourself. Now, in general, there's going to be 2 things, as I've explained. There's going to be your trading capital, which is number 1. And the second part is going to be the percentage gain for the month. Essentially, if you start with the trading capital, that's kind of like your bank account in a way. And then the percentage gain that you make every single month is the money that you can keep at the end when you withdraw it. So there's going to be a few ways that you can actually make money. The first part is going to be personal capital. This is the way that a lot of people compound their account. Of course, this is personal, so this is money that you are going to have to put in yourself. For beginners and people getting into the industry, usually they don't have too much saved, so they prefer some of the other routes. The second route is going to be prop firms. This is possibly one of the most popular routes that beginner traders can take these days. Again, it gives a little false hope at times, because a lot of people see it as a way to really leverage their amount of money and get into higher capital. But they keep losing challenges because they're not ready, because they don't have a strategy ready. So that's hopefully what this video will actually present to you, and hopefully you can really start to make money in the next year. The final part is going to be aiming for larger investors. This is a long-term move because, again, you are going to have these accounts for quite a while at first, whether it's your personal, whether it's your prop firm. Most likely personal, because with prop firms, we never know what's happening with that company at the time. You just need to make as much money from there as quickly as you can and just withdraw it for yourself. So the first part is going to be compound growth. This one's very simple. Many of you have learned it in math in school. It's simply just starting with a certain amount, and then how much can we gain with that compound interest over time. Of course, it has nothing to do with interest. It's literally just the compound effect over time. So let's just say, for example, you start with $100,000. Could be a prop firm, could be a personal account. You make 10% profit that month. You're going to be ending with a 10% or with $10,000 in profit. Now, here's the thing. You could withdraw that and you could take it into your personal bank account, or you could keep it within your trading account and you simply just trade further with that amount. So rather than making 10% the next month on 100K, you'll be making 10% on 110K. Eventually, by the end of the year, you'd be left with a value of around 285,000. Again, these are quite unrealistic goals. Definitely 10% a month is something that people aspire to long term. It is manageable, it is attainable, but definitely you need a lot of good psychology, good risk management, and definitely a good strategy to help you along. Number 2 is going to be prop firms. There's many styles. There's many different amounts that you can work with. Essentially, you pay for the prop firm. challenge. Once you pass it, you are enabled to these sort of balances. In my opinion, these are not live accounts. These are simply just demos, and many people agree to this kind of theory. But it's at the end of the day, you're just making money on the amount in a way. Whether how you get paid is obviously up to you. But let's just say, for example, you start off with 50,000. That usually we can expect a much higher profit split, but I went with something lenient here. 50%, 10% monthly gain, you'd be making yourself 2.5k. Obviously, the higher amount you go in prop firms, obviously these are more expensive, but you are going to be taking a higher split for yourself. Now, the third part is going to be investors. Now, with this, it's a lot more flexible in terms of how you approach it. You could show your performance over time for at least 12 months or so. This is definitely something, for example, that I'm definitely aiming for long term as well, especially with the bigger accounts that I'm dealing with. Remember, they do look for low drawdown and safer gains, because at the end of the day, we're not trying to make crazy returns for them. They are looking for a safer return. Again, would they rather invest in the S&P 500, for example, or would they rather invest with you? That's definitely something that you have to weigh up. Now, how much money do you actually want to make? So let's just say it's 5k a month. You want to, and you're making a comfortable 5% a month. What that will essentially mean is you need to be working with a 100k account. 100k account, you make 5% on that account, that equals to $5,000 in a month. So your goal is pretty much to get up to that capital size that suffices for you. Again, it really is going to be a harder situation at first when you're dealing with smaller accounts. But trust me, take this piece of advice, you have to be very patient. You can't be rushing through this type of procedure at all. Now, the second part is the very basics. This is all about the currency pairs, pips, and everything to do with that. A lot of people get into all of this and they kind of rush through things. I definitely want to take you through more of the introductory phase. So yeah, the basics we'll actually go through. Number one, what are currency pairs? Number two, major minor pairs, and then obviously pips and starting to measure in them as well. Now, here's my piece of advice. If you want extra reading, baby pips is usually referred to from a lot of people, especially a lot of educators in the beginner stages. I would definitely recommend. It's a great place to have the basic understanding. So if you wanted to, at the end of this video, you can have a little look around on babypips.com. I recommend a few sections, and I mentioned this in the course as well, in that free course. Sections 1, 2, 3, 4, and then 6 and 8. There's a lot more, but we're not really looking for the strategy part of the course. Because at the end of the day, a lot of beginners get into that and they see that it doesn't work for them. It's very general and basic knowledge. We want the basic understanding. Essentially, we want to learn the language of trading. We don't want to learn the strategy within baby pips. Now, what major currencies do we actually have? So these are the 8 major currencies that we look at. These are all interchangeable. So when we get into the pairs, we obviously combine them. For example, starting off with the main one, this is going to be the US dollar, United States dollar, pound, euro, Swiss franc, Canadian dollar, etc., etc. So we can kind of see these are the main ones we're looking at. A little side note for this as well. A lot of the reason why you choose a specific pair or a specific currency is going to be the times that it's traded. So that's something that we'll get into a bit later. Now, these are the major currencies. We also have something called minor currencies. These minor currencies can also be traded. The issue with them is they usually have high volatility because they have a lot less volume within the market. So in general, a lot of retail traders try to avoid them. They try to literally just stick to major pairs. Obviously, some of the minor pairs include Turkish lira, Mexican peso, South African rand, Norwegian krone or NOK, I believe it is one of them. Yeah, there's quite a few, but in general, I've been trading for years now and I only stick to the major pairs. It's worked well for me. It works well with the strategy as well that I implement. The elite strategy that's my personal strategy in a way. So yeah. Now, we've learned about the currencies. Now we can actually start to get into some of the currency pairs. Now, in the Forex markets, currencies cannot be traded individually. So what I mean by that is you can't just trade US dollar and that's it, whether it goes up or down. You have to trade things in comparison to each other. So an example is USD JPY. With each pair, you can either buy it or sell it. Now, we determine this through technical analysis, but most importantly, it's fundamental analysis. I have a lot of information about that, a few free ebooks and stuff like that. Obviously, I'll send that out over time, but for now, at least you've got some of the basic information. This really determines some of the true value of the directional bias of a currency pair. Remember, fundamentals are the most important part, Then obviously our technical analysis is it's what allows us to get into some of these you know, trades in a way. So, you know, in this course, you'll basically learn technical analysis from start to finish, few bits about fundamental analysis. Obviously, that's a lot more complex. So I would definitely say you need to learn some of the more basics at first. Now, here are two terms that you're going to be hearing all the time: bullish versus bearish. Now, bullish is going to be when you're buying or you're long in the market. These are three terms that are used in conjunction together. Then you've all got the opposite, which is bearish. Bearish is for sells and also known as shorting the market. So, as an example, if we are bullish for the USD JPY, we are saying it will buy up. If we are bearish for the USD JPY, we are saying that it will sell down. Now, in terms of a currency relationship, again, in every single currency pair, there's two parts to it. You've got the first part, which in this example is the US dollar. The second part is the Japanese yen. Now, we need to look at currency relationships. In this scenario over here, we've got Euro USD, which is buying up. So what this actually means is that the euro is getting stronger and the US dollar is getting weaker. Generally, this is the rule. It could differ at times. I don't want to complicate that too much, but when we get into some of the charts, I will explain it a bit further. But pretty much when one pair is going up, the first sort of currency that's mentioned is usually the one that's getting stronger, or it could be the fact that the second one is getting weaker. It obviously, you know, here, for example, you are looking at the inverse relationship when it comes to the second one. Now, on the opposite side as well, let's just say we've got USD JPY. If we are saying that it sells down, what this means is the US dollar is getting weaker and the JPY is getting stronger generally. You know, I'm not going to say that for every single time. Now, in terms of nicknames, this is not the most essential information, but just something I believe that everyone should know. Here are basically the names for it. So we've got the Euro USD, GBP USD, you know, etc., etc. There's many names. Me personally, whenever I am referring to something, rather than saying the long name Euro USD, I say EU or I say GU, UC or UCAD, AU, some stuff like that. So whenever I'm talking to my members, they understand what I'm talking about. Now, the second part is we've understood that now we've got Forex currency pairs. How can we actually value them? Pretty much it's the way through Forex currency quotes. So within the market, you'll be provided with something like this. GBP/USD is going to equals to 1.25. So this means that for every £1, you will receive $1.25. So our objective is this. And this is the whole objective of trading. If we anticipate a rise in value, we will buy that currency pair. If we anticipate a depreciation in that value, we will sell that currency pair. Again, it's all about your analysis and seeing where the market will potentially move. All we have to do is simply get into that trade at that time. As an example, we've got one piece of movement over here. So GBP USD started out at 1.25 and now it's moved to 1.25500. As you can see, there's many decimal points after the sort of within the quote. And this is something that we're going to be talking about right now, which is pips. So in this example, this pair has actually risen by 50 pips. So let's see what they actually are. Now, pips or a pip is a percentage in points, so a unit of measurement. Like how a unit of measurement of temperature, we've got degrees Celsius or degrees Fahrenheit. You know, it's just the same thing in a way. So as an example, we've got GBP USD over here. Generally, for most pairs, a pip is going to be the fourth decimal place. So in this example over here, we've got 1.2507. 07 is going to be that last decimal place. And then we've got some exceptions as well. We've got GBP, JPY as an example. Over here, JPY pairs usually have 2 decimal places. And for that, you know, it's generally for JPY pairs. The other ones are going to be US dollar, NZD, AUD, any of the others. When it comes to JPY, it's 2 decimal points. So yeah, that's definitely something to take a note of. We also have something called a pipette. A pipette is basically a tenth of a pip. We don't use it as often. Generally, it doesn't really affect me because it's such a small value at the end of the day. We usually would look at the pips, essentially. So most pipettes, here it's meant to say a pipette is going to be the 5th decimal point, and then for JPY it's going to be the 3rd. Now, in summary, most retail traders are going to stick to 8 major currencies. Now, we do not need to follow all of the combinations. We only need to focus on a few. Remember, your focus is a lot more important than anything else. You don't want to be trading all of these different types of pairs. You simply just want to be focusing on a few. My personal recommendations, stick to 3 in the beginning. Of course, if you branch out to more later on, make sure to actually test these kind of pairs. But for sure, I've even got favorites at this moment. The EU and GU is definitely my favorite. At times, GJ as well. So that one being GBP, JPY. So the first part of the tutorial is essentially just going through some of the basics. And now we're going to be getting into the next part of the video. And so just a little side note over here whilst we're just finishing some of the basics. The point you're going to get to is this. You'll learn the knowledge you need. You'll learn the basics. You'll learn SMC, even with the free course that I've just recommended in the beginning. A complete 7 modules. But the problem people still have is this. I've mentored over 2,000 students in my private group, and it's the one thing I've realized. People understand the knowledge. They will get to a point where, they look at all the videos you have, they understand every single PDF, but when it comes to actually putting it into a strategy, that's where they struggle. And this is where I come in, the elite strategy. Before, I used to sell this exclusively for $200. Now I'm selling it for $49.99. I honestly wanted to make it as accessible to as many people as possible. Again, when it comes to this strategy, what you're going to receive is the full strategy from start to finish. You'll get it with the course, the PDF guides, step by step, the 5 steps that I use every single day in my own personal strategy. Yes, it's built from the understandings of SMC, but it's also got a few concepts that I personally have developed over time, and it's something that a lot of my students are using nowadays as well. Again, we're bringing AI into the whole thing very, very soon. So yes, if you do want to access it, it is a one-time payment. Or $49.99, you'll get lifetime access to all of this included. Again, a little bonus for every single one of you, Elite Strategy Bootcamps. That's going to be happening twice a month. So if you are looking to get involved into this, there will be a support Discord as well for any of your needs. Any support and with the strategy itself, any questions you might have. But it's the boot camps where I seriously consolidate everything, answer your questions live as well. So if you do want to get involved with this and be sort of more in touch with me personally as well and my own strategy, here you go. This is the place. And so just a quick little side note for those of you that really want to take their trading to the next level. The one thing I always recommend to my students is backtesting and journaling. And the one place I personally use for all of this is Trader Edge. So this software gives you all the access to every single backtesting feature that you need, a whole strategy tester to allow you to put it into different libraries, a calendar, which I believe is actually one of the most essential tools to accurately track your trades and see your progress over time. And one of my personal favorites, the forward testing feature, which allows you to project how a certain strategy will do over time. So if you want to get started with this, click the link in the description to access one of the most trusted backtesting softwares there is available. Okay, so now we've gone through the very basics of trading. We understand what we need to know to set our foundation in terms of how we actually trade, how we're going to make money in terms of pips, everything. Now we need to know how we can apply this. So the first thing you're going to do is understand that TradingView is one of the most important tools you can use in your journey. This is something that you're going to use every single day. Yes, there is a free version. There is also a paid version. My recommendation is whenever they put massive sales on, definitely get the yearly discount. That's something that I do personally as well. But pretty much on TradingView, what I would recommend is whether in your Mac or on Windows, you're going to be able to download it. I personally use the TradingView app. It's very, very clean. In terms of the way I've actually set my chart colors and everything, this isn't something that you're going to get instantly. It is something that you're going to have to adapt over time. But either way, this is pretty much just a short tutorial of what it is. Essentially, you're going to have this kind of main page. So TradingView is an area where we can actually search up charts. So the way it usually goes is, for example, we'd search up Euro USD. We know that's one of the main pairs. Now, there's going to be a few things that we need to know about this. The first part is the brokers. There's many brokers that offer their charts. So, for example, FXCM, Oanda, Forex.com. These are all places you can go and actually trade on their servers. For me personally, I'm signed up with Saxo, so hence why I use the Saxo charts as well. Those who use prop firm accounts, you don't really have a chart dedicated just to that prop firm. You're going to have to use any of them. But either way, it's all very similar. When you log into here, just pretty much click into any one of them, launch the chart, for example. So as you can see, we're on the web version over here. So what I'm going to do is I'm simply just going to go to the app over here. On the left-hand side, you're going to have all your charting tools. So this one over here is your cursor whenever you're moving around. You've got the line chart tools. For me personally, you can have a little screenshot over here, just, pause the video or whatever. I personally use the trend line and then the horizontal ray quite often, just moving down into some of these other areas as well. Just basic, charting templates and charting tools that you can actually use. Some of the most important ones that you will actually use on a day-to-day basis is going to be this one right here, the long position and the short position. So this is something that I want to teach to you. Whenever you're entering a trade, you're going to have three things that you're going to bear in mind. The first part is your entry. So let's just say at this point in price, the price where it is currently is going to be this line over here, as you can see, reaching out to the right-hand side. If we were to enter this market right now, we can clearly see that it's bullish, right? We're in an uptrend. So forget any analysis at the moment. Let's just say I want to buy this. The way I'm going to buy it is I would set a long position tool over here, as you can see. Entry where the line is if I am entering a market execution. And then the stop loss will be just below the lows, as you can see. And then in terms of take profit, I'll set that at some point. Essentially, what you're going to have now is something called risk to reward. What that is going to be is when you enter this trade, how much are you going to be risking compared to how much you can potentially gain? So in this example, we have a risk to reward factor of 2.7. It's quite faint to see, simply just because of the colors and fonts I have got on. But let's just say it's 1.1 to 2.7. Let's just round it up to 1 to 3. This means that if we risk $1,000 in this stop loss over here, that means that we can potentially gain $3,000. Again, the reason why we have a stop loss is so that you are protected. Anytime you are in the Forex markets and you are entering any positions, always you have to have a stop loss. When you are entering on MetaTrader 4 or MetaTrader 5, which we will get into, very simply put, you can enter without stop losses. A lot of brokers, they want you to over leverage and lose all this money and everything. So that's their intention. They want you to do that over and over again. Again, risk management is one of the most important facts. Now, moving into some of the other charts as well. On the top left-hand corner, you're going to have your account details. So obviously, I'm signed in as Diamant Capital. Symbol search, you can search up anything. So it could be, let's just say GBP USD. And you've got all the options here. Because I use Saxo, that's the one I would pick. But just for the sake of the video, FXCM over here, as you can see, it's a clean chart. Anytime you want to clear anything up. So over here, let's just say, for example, we're entering a buy up until this point. Just anything random. We could clear it very easily by remove 13 drawings, as you can see. Then moving on, we've got the time frames. So if you don't have the pro version, you can't use the second time frames, and I believe a few of the others. For now, you're mainly going to stick to a few key time frames. You're going to be sticking to the 1 day, the 4 hour, the 1 hour, 15 minute, 5 minute, and 1 minute. These are the main time frames that all traders stick to in a way. Of course, there are in between time frames, such as the 3 minute. You've got, the 45, for example, the 3 hours, a bit of a weird one. It really just depends on your strategy. Most people just stick to normal pair, so normal time frame. So 1 hour suffices. Moving onwards, you've got here, you can control whether we're looking at candles, bars, lines, whatever. Candlesticks is what us traders generally use. This is one thing that, all retail traders are going to be using. There are other things such as order flow charts and, more sort of in-depth charts that you can look at, but these are the basic ones that almost every single person uses. And there's many resources out there onto why people use candlesticks. I'll just get into it right now as well since we're here. The general understanding of why we use candlesticks is this. Whenever you have a candle, you're going to have two types. You're going to have a bullish one and a bearish one. Typically, it's going to look something like this. So let's just clean that up a bit. Over here as well, let's just change the color. All these little hacks that I'm using to pan around quicker and everything like that, I will do a dedicated video on just TradingView on how to be the most efficient. I believe that will help quite a lot of people. So we're going to have two types of candles. We've got a bullish candle, which I'm representing as the blue one, and the bearish, which I'm representing as the gray one. So generally, when we are looking at down candles or bearish candles, the open price is up here. The closing price, the closing price is going to be down here. So let's just label that as open. This one we will label as close. And then we've also got the high. And then we have also got the low. Okay. So now we've got these core bits of information over here. Essentially what happens during this time, let's just say we're on the 1 hour chart. Within 1 hour of time, what has happened is price has opened here. It's then at some point gone to this high over here. It's also then gone to this low. But then in the last second of the hour, it's come back or it's gone down to this close area. So throughout the whole time, potentially what it could have looked like is something like this. And then it ends there. So let's just say here it is 12 o'clock it opened, 1 o'clock it closed here. As you can see, open price, close price. So this is the very, very basics of what candlesticks are. The reason we use them is because the price action, so price action is what we use as a word to understand how prices moved in a way. So the price action can also be linked to timing very, very carefully if you do apply it in your strategy. In my personal strategy, the elite strategy, it's very, very important, especially how these candles close around certain areas. Again, we can apply the same concepts for the upward candle. Again, here it's just going to be the opposite. So very, very simply, open price here. It plays around in between these two kind of areas, this high and this low, but then eventually comes to close at this point right here. So very, very simple in terms of how we actually use that. A few other things on the top area that we can use is going to be the alerts, the replay function, backwards, in case you make any mistakes, forwards. This is your favorites bar. So I don't know if it's on the free version, but if you just favorite it here, as you can see, it's just added on. I personally only use these ones right here. Then moving on to the top right, we've got different types of templates that you can actually use. So my one, I just save it as Diamant Capital. If I was to use a different name or a different type of color scheme, I would just change it up there. And then these ones, simply, this one's quite important, especially if you are within a community. So within my community of 2,000 traders, for example, many people do share their charts. So all you would do, copy image, and then you just paste it as a link into wherever you send it on Discord or whatever. Now, some of the next most important bits is going to be this right here. Of course, the axes over here, you've got the x-axis and the y-axis. Y simply is representative of price. X is a representative of time. So very simply, this is how most charts do look. Top right, we do have this little bit over here. So this is going to be your watch list area. When you do load it up from a fresh account, it's going to look very different. All you can do is simply just cross out the bits you don't want, and then you can add whatever you require. So let's just say we're adding Euro USD. As you can see, I've already added the Saxo chart. But if I do need to add any of the others, I could do that at some point. But again, for me, I do like to order them very cleanly. So I keep AUD separate, CAD, Euro, GBP, everything is kept separate and very clean for me. Now, the key bit that you need to know here is you're going to have many currency pairs. You need to understand which one actually works for you. So if somebody is looking at my chart right now, they're going to be thinking, wow, this guy trades a bunch of pairs. Personally, the way I arrange it is I simply flag them. So with the pro version, you could do different colors. Generally, you only need one color. This is why anyone can start trading for free. You really don't need much. So with this one over here, just put it as red, put it as blue, whatever you want. Then at the top right, you would simply just look for your charts. So as you can see, red list now is very clean. If I know I'm only trading 3 pairs, I would only put my 3 pairs here. So Euro USD, very simply, as you can see, this was the example that we were looking at. So very, very simple over there. Now, moving into some of the others, these honestly are not as important. We do have alerts. But yeah, this is with the pro version if you are putting that many alerts. I personally don't even use that many just because, my high time frame analysis is done, but then I go down to the lower time frames to enter. So I believe this is quite a brief overview of TradingView. It's very helpful in terms, or not even helpful, it's essential, I would say, to your TradingView, to your trading journey. A few other key bits of information that you might want to know. There are some indicators that I generally do use all the time. This is something that, I am going to be posting about more and more over time. But again, this is a complete beginner's guide, so I want to keep it as brief as possible. But yeah, that's going to be it for this part of the course. And now we're going to be getting into the next. All right, and now we're moving on to the next part, which is all going to be about risk management. So this one is very, very simple in terms of theory. About applying it, many people struggle. And honestly, to this day, I understand their struggles, but it can be very, very easily fixed. Now, one of the first things we need to talk about is the position size calculator. So let's quickly just go back to TradingView to analyze something. Whenever we enter any type of trade, what we're going to be doing is this. We are firstly going to need a few things. The first part would be the actual pip size. So we've talked about pips, from the very basic part of this video. In this scenario, the pip size is going to be, it's very faint in, my chart, but it will come up a bit better for you. Over here, it will be this number. So right now it's 19.5. If I just quickly raise that up until 20, just to get it even as a number, or almost 20. Anyways, this is basically going to represent that if we, from this entry point, go down by 20 pips, we are going to get stopped out. The main point that we need to understand is how does this translate or, basically translate into price and into money. So how much money are we going to lose on this? Now, remember, there's going to be a few things when you are entering trades. The first part is going to be the pip size, which is going to be the stop loss size, which is over here. So let's just say it's 20. Now we need to know a few other things. Before we even get into that, the best position size calculator. So if you just search up position size calculator, it's going to be very simple. You've got a few options. Honestly, it really doesn't matter whichever one you use. I've just personally used to my FX book risk management tools. So the currency pair over here is Euro USD. The account currency is all going to depend on what you actually have. So for me, I function with pounds. Personally, my account size, let's just say it's, 1,000. Like just for the sake of this video. And then the risk ratio, as you can see, let's just say we risk 1%. So for £1,000 account, we're risking 1% and we're doing 20 pips. We click calculate and now we can see how big our lot size should be. So this is going to be relevant when we're talking about how to actually enter our trades, which is the next part of the tutorial. Before we get into that though, I want to elaborate a bit more on risk management. With the risk management, you need to understand a few things. We have 100% of the account. Let's just say that is, for this video's sake, it's $1,000. Now, every time we trade on this, we don't want to risk the entire account. That's completely ridiculous. And either way, you would be over leveraging your account. This is the whole purpose of contract for difference or CFDs. Me personally, I trade on spot forex markets just so I can eliminate any of that, essentially. But we'll talk about that more in detail in some other kind of video. For now, it's at least the beginner style. 100% of the account is $1,000. Now, usually, people would risk up to 1%. I would even say between 1% to 2%. Again, it's going to matter on how you are as a trader, how often you trade, everything like that. But I think a good point is to risk between 1 to 2%. If you are trading on a very big account, or it could be a prop firm account, it could be something like 0.5% all the way up to 1%. And I know a lot of traders that stick to this. Me personally, I risk 1% per trade, and that's good enough for me. So whenever we're talking about risk management, this is essentially what you want to be aiming for. There's a few tips and tricks when people are passing funded accounts. The challenge stage, they'll be risking, for example, 2% on a trade. They know that they can go down 10% drawdown. So they know that they have 5 trades to potentially sort of lose out on. Again, if you are losing 5 trades in a row, I think it's about time that you reevaluate your strategy, for example, because that essentially means you have, if you win 1 trade after 5 trades, 1 out of 6, you can see the numbers right there. So that's the very simple stage of how to actually calculate your position size calculator. I would recommend to save this, obviously in your bookmarked area. I use Chrome just for trading and everything like that. So yeah, this is the quick and easy part about risk management. So very, very simple. So now we've understood everything there is up until the charts. So how can we actually apply this and make money in the markets? So again, we've talked about, let's refer back to the beginning where we talked about your initial capital, the profit you'll make with the strategy that you have, and then obviously you'll profit from that. Now we need to use an app that allows us to trade. So essentially what you have is 2 parts. You're going to have your broker, which is the company that you trade through. So every time you invest money into somewhere, so for example, with a broker like Saxo, which is the one that I personally use, as you can see over here, essentially you invest money into their accounts. That account is in your name, and then you trade in that account. So it's essentially, it's kind of like thinking of a bank account. So you've got to open it up with someone so you can trade within their services. Then we've also got MetaTrader 4 or 5. So very simply put, this is the platform that you're going to use to execute your trades. So that's the part that we're talking about right now, execution of trades. So there's two types that you've got, or the two main types that people generally use. You've got MetaTrader 4 and MetaTrader 5. Me personally, I prefer MetaTrader 5 just because it's got a nicer interface. It's a bit easier to use. Lots of people use either one. It really doesn't matter. It's just whichever one you're used to. But essentially, when you've got it on your phone, which is a way that a lot of people trade, it looks something like this, where essentially you've got your quotes on the bottom left. Then you're going to have all your charts over here. So again, you can use this little icon over here to rearrange it. And then obviously you can put your top 3 pairs. You can delete everything else. It really doesn't matter. Then when you scroll further up, we've got the chart, which is obviously when you click on one, you can click on the charts. You can click to trade. When you click on trade, you'll see your active positions. History, or you'll see your history over the past however long you want, day, week, month, whatever it is. And then settings is everything to do with the interface. So it's very simple. When you do look on Instagram or any social media on Twitter, you would see that a lot of people do use this platform. It's the most famous out there and possibly one of the easiest to execute with. Again, some brokers do have their own individual services and their own individual sort of apps and everything like that. It just depends on how big the company is. So again, just reference to Saxo again. They have their own platform, Saxo Trader Go. It's the one that I personally use. The benefit of that is some brokers, you can actually link to your trading account over here. So when we go onto, let me actually go onto the app over here. When you actually go on TradingView, what you can do is along the bottom, you can click on Trading Panel. As you can see, what pops up is a bunch of brokers. You can, if you want to, is sign up with one of these brokers. It could be a demo, could be a live account. And then once you sign in, you can actually trade live on the charts. So essentially what it looks like is something like this, where you right click, trade, as you can see, and then you would create a new order. That new order, obviously it's telling me to sign in. I'm not going to sign in for now, but Saxo would be the one that I would trade with, for example. Another one that ones that people recommend are, Owanda, FXCM, Pepperstone, any of these, honestly, they all have really good spreads and everything. Spread is the thing that you really want to look at, and their customer service and all that kind of stuff. But yeah, you can use any of these brokers to actually execute on TradingView. So it really does help when you are trading live. And yeah, it calculates your risk appropriately and it's quite easy to use. So yeah, that's going to be it in terms of execution. So again, you're going to be using MetaTrader 4 or MetaTrader 5. And okay, so that sums up pretty much everything you need to know as a beginner in 2024. I've pretty much put everything that I believe every beginner trader should know, especially in the first few stages. Again, refer back to the basics, refer back to everything that we've talked about. The first step I would recommend is go and sign up for that free SMC course. It's completely free, 7 modules from start to finish. Everything that you see on YouTube, it's a completely different level, put in, in chapters where it's all consolidated and put in nice information. So sign up to that as soon as you can. But I will say this, there's one problem that traders will always face. It's actually putting it into a strategy that works for them. And this is where my elite strategy comes in. It's something that I've employed for quite a few months now, and something that I introduced to my personal students. We've been going through it for a few months, and it's come to the point where I want to get this out as public as possible. Before I used to sell it for $200, now I'm publicly selling it for $49.99. This is going to come with lifetime access of the Elite Strategy course from start to finish, with PDF guides, every single thing you need, with entry models, everything you need, back tests. We've got a live recording of me with 6 months of back tests. And yeah, if you want to get involved, everything is available for $49.99. There is also a support Discord for any of your questions about the strategy. Most importantly is going to be the Elite Strategy Bootcamp. So if you do want to get involved, that is happening twice a month. I do host them live answering all your questions. So if you want to get more into contact with me and my personal strategy, this is going to be the place. So guys, I hope you enjoyed this video. This is the complete beginner's guide to trading in 2024. I hope you enjoyed it. Please be sure to share it around and let's get the word out. Take care and I'll see you all in the next one.